Hello and welcome back once again to Andersen podcast series Everything Tax. Today we have two senior partners from Andersen Luxembourg office, Mr. Cornelius and Mr. Asbed, to discuss about the tax regime in Luxembourg. So, welcome on board, Cornelius and Asbed. Help us understand about how the tax regime works in Luxembourg.
Okay, so basically, profits of Luxembourg corporations are taxed at a rate of 24.94% in Luxembourg. But there are, a lot of exemptions. And the most important of them is the income that the company would derive from its shareholdings. So any dividends that a Luxembourg company would receive from from its subsidiaries or any capital gains that would be realized by that Luxembourg company could be exempt from corporate income tax in Luxembourg if certain minimal conditions are met.
So basically, what all the kind of incentives that probably the UAE businesses can see, setting up the base in Luxembourg, because essentially the UAE is now introduced the corporate tax with effect from 1st June 2023, and the rate of tax is 9%. There's an enormous exemptions.
That is actually a very good point because in Luxembourg actually, let's imagine that we have shareholders from Emirates. They hold shares in a Luxembourg company. Any distribution from the Luxembourg company to the Emirati shareholders actually would be exempt from Luxembourg withholding tax if actually one of the conditions is that the shareholders of the Luxembourg company must be subject to a tax of at least 8.5%. With that condition, actually, since the companies here in EU will be taxed at a rate of 9%, considering that any distribution would be from now on actually exempt from Luxembourg withholding tax.
I think that's very interesting point. 8.5% and more can have the dividend totally exempt from withholding.
That's correct. Yes.
I think a lot of businesses,
I'm talking here about, dividend exemption taxation because, in Luxembourg, we do not have any withholding tax on interest payments. So
interest payment also does not...
Are also totally subject, out of scope of the withholding taxes in Luxembourg.
Wow. So essentially that means that if we think about the businesses which has, the Treasury, they wanted to move their Treasury out of Luxembourg. Considering the fact that UAE businesses has a lot of global presence, they have the global subsidiary, and some point in time they wanted to look for a destination where they can run the central treasury from, which means kind of cash pooling arrangement.
Exactly. Yes.
So how this can benefit, from a Luxembourg perspective?
From a Luxembourg perspective, actually, any cash repatriation to here local shareholders that could be achieved withholding tax free. Actually, that is the main benefit.
So essentially, there is no withholding.
There would be no withholding tax on distributions, and any income that the Luxembourg company would realize actually that could be also achieved corporate income tax free.
Wow, that's quite interesting. But I'm sure, this interest going to be subject to transfer pricing.
If there's some financing activities, yes, it is always better to have a transfer pricing study just to be sure that the interest rate that are applied in the structures are in line with the arm's length principle.
That's quite interesting. So I'll come back to you, Asbed, and in the meantime, I want to ask you, Cornelius, tell us something about the investment regime in Luxembourg. How does it operate? What kind of benefit that UAE businesses can see that, and what kind of businesses can look out Luxembourg as a destination for the funds?
Yeah. Well, first of all, thank you for inviting us to participate in this podcast. And I think the question you're raising is very interesting because Luxembourg is known as a worldwide jurisdiction to establish investment platforms, either in very regulated forms for retail investors mainly, up until the range of very unregulated structures. And in between, you can have a variety of choices that you can choose from. Luxembourg is, legally speaking, a very stable country. So investors going through Luxembourg will have the certainty of being able to rely on legislation being in place, but not only being in place, but also being steadily in place and without any sudden changes. So you can plan for a long time ahead. the tax regimes that you have for those investment structures that are available in Luxembourg are very flexible as well, because you may have tax-exempt structures up to taxable structures if you need to meet certain requirements in order to benefit from treaty provisions, from local provisions, but also from some shareholder provisions that they need to have a certain minimum threshold of taxation that needs to be met. So from that perspective, Luxembourg is very flexible, is very recognized, has been one of the first jurisdictions in Europe having established those platforms, and as such has today evolved to what we used to call the gateway to Europe, but at the same time also the gateway from Europe. And I think that is what is making the attractiveness of Luxembourg, that it is opening the world to a market of about 500 million consumers, investors, which is the EU, but at the same time giving also that access to those 500 million to the rest of the world, which is obviously much bigger, but is very attractive.
Oh, that's very interesting to hear. But when I talk about the funds, often there's a one, misbelief or belief factor is there, which bring out the factor as to significance of the compliance and substance.
Both of them are obviously very important issues, and we have seen in the past years an increase in attention to this subject. Compliance, both from a perspective of being compliant from a governance perspective, which I think is very, very important, because you need to make sure that those structures are properly run, but also from a substance perspective, because you want to avoid that you have structures that are labeled and qualified as so-called letterbox companies, or for banks it would be shell banks. So all of that is something that is really needed in order to make sure that the structures that are being set up are viable and are credible. Another big topic that is being talked about a lot is compliance with regards to AML and KYC provisions, the fighting against the financing of terrorism. I think all of those topics have raised enormously over the past years. Luxembourg, because it's one of the largest financial centers in the world, has been under deep scrutiny from international organizations. And I'm pleased to share with you also the news that came out about 10 days ago, that the FATF, so the Financial Actions Task Force Committee, has in fact given a white label, a good label to the Luxembourg efforts undertaken in fighting the possibilities to commit money laundering crimes. So a lot of attention, a lot of energy has been invested into by the industry, by the regulators, by the government, to make sure that Luxembourg can be considered as a very safe place to conduct business from and with.
I think that's quite interesting, because a lot of UAE businesses at the moment are considering as to whether what is the right jurisdiction for them, what is the right model for them, what is the right structure for them to have the right investment vehicle and the place of choice that they want to make it out there. I'm sure, the Luxembourg can be a good option. So I'll come back to you on a further question as to what kind of model that we can really envisage for the businesses in UAE and what kind of, specific industry. But in the meantime, I want to ask you a bit about the treaty, the treaty that Luxembourg and UAE has, right? So UAE has already mentioned out in the corporate tax that dividend is going to be exempt, subject to participating exemptions.
Yes.
At the same time, the capital gain tax is going to be exempt, subject to meeting certain conditions out there, with respect to the corporate tax. What kind of other transactions that you envisage out there which can benefit out of the treaty, such as, the interest, obviously?
I mean, the treaty between the Emirates and Luxembourg was signed in 2005, and it's in line with the OECD Moderate Tax Convention. So there's nothing really exotic in that treaty. So it's a really straightforward treaty. Actually, as you know, the treaty will not create any taxation. It will only give the authority to tax to a country or to another. So you're talking about the interest exemptions. That is something which is, of course, if let's say that there's withholding tax on interest payments, and that Luxembourg has authority to do that, you go and check the local legislation, and then you can see that Luxembourg has no any withholding tax on interest.
And one more thing is, how easy for taking this credit offset? I mean, let's say you get taxed, Luxembourg, and you want to take the foreign tax credit in the UAE. How easy, from a Lux perspective, it's going to be for the UAE business?
That is also, provided by the tax treaty between Luxembourg and the Emirates. So there's a straightforward mechanism, which is it's not based on a tax credit system. It's an exemption system.
Okay.
So you don't have to credit it. The Luxembourg, let's say that there's dividend payments. Luxembourg is obliged to exempt that income. So it's a different system. It's not a tax credit system. It's an exemption system.
Exemption
Yeah.
system. I think that's very interesting criteria for businesses that is operating out of Luxembourg, and they have the tie-up along with the UAE, and UAE businesses having a tie-up along with Luxembourg businesses. So another point to that, Asbed, on the global minimum tax.
Yeah.
A lot of businesses in UAE which is exceeding the threshold of
750 million euros, yeah.
And they are operating globally. Do you see any incentive for them to look out their holding structure out of
they have no other options than to look at their holding structures, actually. As you said, groups with a turnover of more than 750 million euros will have to pay taxes in each country where they operate, and that will start already next year. So we in Luxembourg, the Luxembourg government has not released already the draft law, but it just, the Ministry of Finance just guaranteed that will be done in due course, and as all the directives actually that Luxembourg has implemented. So they are working on it. So we are still waiting some information on that, and specifically how that will apply on the fund sector. So all the tax business is really looking to that first draft, actually.
Because essentially, the funds are generally exempt out of
exactly
minimum tax. So I think it'll be interesting to see that how it impacts in Luxembourg, because a lot of people are eyeing that particular decision to make their decision as to whether which all jurisdiction is favorable to them.
Exactly. Yes.
So Cornelius, I want to ask you another question in the similar line of that. So when people set up a fund out there, how they can benefit by setting it up a fund? Let's say, UAE businesses, as you know, that within the Emirates, you have real estate as one of the big activity. You have oil and gas, and you have a trading. The trading of commodity, trading of any sort of commodity get traded out of UAE significantly. We have logistics sectors out there. So if you can cite some examples of for businesses, they can really look at the model and benefit the regime in Luxembourg.
Yeah, with pleasure. Just take the example of an asset manager developing real estate in the area here, and he is trying to attract European-based investors. I think that is an important aspect. You need to look at where is the investor base to make the decision where you are going to set up the fund. And under the assumption that he's looking at EU or European money, be it from institutionals, be it from high wealth, net worth individuals, maybe the lesser from retail investors, but that may change over time as well. Private individuals who are really looking to allocate some of their assets to this asset class, they would be looking at setting up a structure in Luxembourg. They would be looking at setting up a structure that is, as I mentioned earlier, legally reliable, where you have known and experienced actors, auditors, bankers, accountants, tax advisors, the regulator as well, all involved, all in the same ecosystem, in making sure that the investors feel safe before they allocate their money to a manager who's nevertheless not next door, but is a little bit further away. And that might be something where the manager, located here in the UAE, may be interested in setting it up. And then, as we said earlier as well, you do have that toolbox of a variety of structures. You can look at structures where the product itself is regulated. You can look at structures where the manager from a Luxembourg perspective is regulated, or anything in between. So we are very flexible in offering that opportunity.
I think that is very interesting to know, and that's why, probably a lot of UAE government-driven funds and entities are having some sort of fund structure in the Luxembourg.
As well, because they, as I said, it's made to attract money from those jurisdictions, but it's also made to facilitate the investments in these jurisdictions.
And why you said that, people need to have, the investor need to have a investor-friendly setup out of, European jurisdiction to bring out the fund in the UAE. What is that angle? What really, plays that important role? Why it plays?
The angle is uncertainty about what am I getting, what am I buying. And if you go to the shop, you buy the apples, you have been buying all the time. You wouldn't start buying something exotic. So if you want to sell an apple, you make sure that it is an apple that your investors want to know. The same with the investment fund product. And I think that is important.
I think this is a very important point for businesses to understand that if you wanted to attract the investors out of a particular regime out there, then you need to look into the setup in that particular regime which they are familiar with. Once they are familiar with the setup that operate out of that particular country, then it becomes very easy for them to put the investments through that vehicle within the Emirates itself. I think that's a very important point that I wanted to work out.
And then, if I may interrupt you here, I think it is our role to educate the local managers to make them feel familiar with the product, because they want to go out to those investors who feel already comfortable with the product. And that for us is much easier than educating 100 investors about one product. We prefer educating one about the product.
Yeah, and I think that's very interesting point, because simplifying certain things. I met a lot of professionals, from different countries, but the way you simplified the entire approach, that why you need to have a base out of Europe to attract the investors, and how the investors react towards that particular structure is quite interesting, and I think that makes sense as well, right? So, final question on the Lux side of things, what kind of services Andersen Luxembourg offers, where the businesses out of UAE, they can connect with you? And
I think it's relatively easy to answer everything that is needed to do those investments. Let it be tax advisory services, let it be tax compliance services, accounting services, reporting services, governance services, administration services, banking services. All of these services we offer.
The legal services as well?
The legal services as well. And what we don't offer is audit services, but everything else that you need in order to set up such a structure can be found through Andersen and Luxembourg.
Perfect. I think that's so nice of you, and thank you so much, Asbed, and thank you so much, Cornelius, for having this time out for this podcast, and thank you so much for sharing this important knowledge base about Luxembourg for the businesses and viewers of Andersen podcast series. Thank you so much.
Thank you very much for the invitation.